welcome to another episode of Gossip Finance, where I am your host, Alacius Inger.
And I'm Duncan Sandlin. How's everybody doing today? How are you, Lacey?
I'm excellent, excellent.
Good.
Man, there's some interesting stuff going on in the news. I can't wait to talk about it.
Yeah, we got some more finance stuff. We'll skim through Trump. I'm not ultra excited about those. But let's start out with the auto workers union strike, right? So that... So as we're filming, they might go on strike starting tonight if they don't cut a deal. But we'll look at the little news report real quick, and then we'll look at a little analysis of what's going on there. Come on, baby. There we go.
Phil LeBeau live in Detroit for an update on the ongoing UAW battle. Hi, Phil.
Scott, we have received some information from a source familiar with the UAW's plans for the plants that it will plan on striking come midnight tonight if they do not reach an agreement with Ford, GM, and Stellantis. And this is our understanding of the plants that will be announced tonight. 10 o'clock is when we will get the official announcement from the UAW. Let's start first off with General Motors, Romulus Powertrain, Toledo, Ohio Propulsion, and the Marion Metal Plant in Indiana. For Ford, it's our understanding that the UAW plans to strike at the Livonia Transmission Plant, Lima, Ohio Engine Plant, and the Cleveland Engine Plant. And finally, for Stellantis, we understand that the UAW will walk out at the Kokomo Transmission Plant in Kokomo, Indiana, and the Dundee Engine Plant. We should stress, we have reached out to the UAW for confirmation that this is, in fact, is the plan. We have not heard
see,
back.
Look at the prices. Man.
Yeah, I was really eager to see what the prices on those stocks were doing. Hence, I was glancing down. I was like, oh, well, what's that stock doing right now? Because
it's not doing. I mean, you're talking about Ford is only at $12.48.
Yeah, I was gonna say that Ford price. I mean, I kind of wish it was a little bit lower, to be honest with you.
Yeah. It's still pretty low. I mean, GM is at 33.33, but they're all down like almost a whole percent. What is that? 10 basis points, right?
Right.
But yeah, so I think the interesting thing about this whole thing is, one, good for the union. I mean, these people are underpaid, so they're asking for more money. They were asking for a little bit better working conditions, working hours, just basic stuff. I mean, nothing real ridiculous here. The other thing about it is those are major plants, and I think he actually gets into it here real quick, because he'll talk about what kind of plants these are, because this is important for investors to understand, and just GM, I'm sure, knows it.
The UAW, but our source says this is the game plan for the UAW in terms of the targeted strikes. One last thing, Scott. If you look at all of these plants, the engine and the transmission plants, what do they provide transmissions to? The most profitable vehicles. The pickup trucks, full-size pickup trucks, as well as SUVs, the most profitable internal combustion engine products that are made by GM, Ford, and Stellantis. And again, we'll find out if this is actually the plants that the UAW walks out of tonight, if, in fact, we hear a strike is announced. Guys, I'll send it back.
So I think that's really great for UAW, because what that tells you right there is we know where your money comes from as your workers, and we're going to make it hurt.
Mm-hmm.
Until you give us what we want, we're gonna bring the pain. And this is just the most profitable engine plants. This is like the tip of the iceberg of what we could do. Because you're talking about, 8 plants out of hundreds?
Right.
This is just the rattling of the saber, the twisting of the knife sort of bit. I mean, this isn't even they're saying we can really make this hurt if you guys don't come to the table. So I thought that was really strategic of them. I don't know if you have any comments on that, but I have Sean Fain here from the head of the union workers. He's the president, the United Auto Workers. And this I stole from the majority report, but this is where this always comes back to, is they got to ask, well, you're striking for more rights or for better working conditions. Won't that hurt the economy? Aren't you thinking about the economy as a whole? And that's where this question comes in from. I think this is Jake Tapper. Yep. Tap shoes.
So analysts say a prolonged strike will push up auto prices and dramatically hurt the economy. Are you worried about either of those possibilities?
It's amazing to me how analysts, when workers ask for their fair share, it's always the end of the world. And, no one, the last 4 years in general, in the last decade, these companies made $250 billion in profit. In the last 6 months alone, they made $21 billion in profit. In the last 4 years, the price of cars went up 30%. CEO pay went up 40%. No one said a word. No one had any complaints about that. But now, God forbid that workers actually ask for their fair share of equity in the fruits of the labor and the product they produce. And all of a sudden, it's the end of the world. So, if the talking heads, the pundits, the companies want to say that, if we strike, it can wreck the economy. It's not that we're going to wreck the economy. We're going to wreck their economy, the economy that only works for the billionaire class. It doesn't work for the working class.
I don't know how he could have answered that more perfectly. That was the perfect answer. Yeah, car prices have gone up 30% in the last 4 years. Executive wages have gone up over 40%. I don't see you dragging the CEO of GM on going, hey, aren't you gouging the economy? Aren't you gouging the American people? You're inflating the prices.
Right? At the same time, these workers have some things that they want, and God forbid,
Well, what's really ironic to me is the argument Tapper made there, and that's why he kind of backed off, because it's a stupid argument, is, all right, so if you guys strike and get what you want, it's going to drive up auto prices because they're going to have to give you what you want and pay you more, right?
Right.
Well, the prices have already been inflated 30% and you're not paying us more. So clearly we're not the cause of the inflation. What's the cause of the inflation in this case? Well, the fact that they could get away with it. We know that. All the companies inflated their prices. They didn't pay their workers anymore any better. And now their workers are going,
of course not.
Right, now their workers are saying, we want a cut of the pie. Now, I know historically you could say that, yeah, paying more it drives up inflation, and it was a big factor. But the bottom line is it's never driven it up to like this level. What usually drives it up to this kind of level of inflation is because there's either a huge shortage, or because in this case, the companies realize we can get away with charging a lot more for the same product, and people will still buy it. Which also brings like interesting news that they're revising the PPI in the consumer report. So it seems like Americans are still spending. The retail sales actually went up higher than expected in July. So it's like, obviously, people are still spending despite all this. But it's like, God, it's just such a weaselly thing. When some guy making $20 million a year now makes $40 million, right? It's fine. But a guy asks for, hey, could I just, get a 40-hour work week and maybe a 10% raise? Nope.
Right.
Oh, man. So anyway, good for them. It's nice to see unions are doing stuff. I mean, it's been a long time, and workers have taken. Right. Yeah, workers, and every time we have these like recessions or economic problems, who takes the brunt? It starts with the poor and it works up to the middle class. But the rich.
Well, in many situations, it's the workers, the people that are making all of the money or doing all of the labor for whatever business or corporation it is. Those are the ones that are, having to take it all.
Yeah. Well, anyway, we're going to move on here to